Everyone talks about buying property, but some of the fastest wealth is actually built by buying businesses. Today, we're breaking down how people are buying, selling, and flipping businesses. Joining me today, I've got Shreyan Shah, business broker, helping people buy and sell businesses, and Pooja Chaudhary, who is finance broker who helps structuring deals and get them funded. Welcome to the Property Triangle, both of you. We're going to start with the first question. I think I'll start with you, Pooja. Why buy a business instead of starting one?
Thank you, Arpit. Thanks for inviting me. First thing is that the business would actually drive the cash sales for you. So there is money directly into the business. So when someone is buying a business which is already established, you're walking into and getting the paycheck at the end of the week. While when you are starting up the business from the scratch, you have to build the entire profile, you have to build the audience for it. So when you are buying the business, it has got its brand value established, it has got its customer established. So it's much better off to buy the business which is already established in comparison to starting the one.
Yeah, from a financing perspective, does it make much difference?
Oh, it does. So when lenders are looking at the applications, they love funding, of course, the established businesses, because once again, saying the same point that that business has proved itself in the market. It is doing well. It has got the operations set up. It has got the staff there. So it's much easier to get the uh, funding for those businesses from the lenders, as well as they have got the more faith because it's easy to compare in the market that
Yeah.
how they are doing it in comparison to other the competition in the market. While if you are starting business on your own, then you have to prove it from the scratch. You have to do the whole storytelling. So then we are just visualizing based on the data. Of course, I'm not saying that the startups would not do well. They do well. Like, of course, at some point, someone
Yeah.
started it. That's how they are there. But lenders prefer the established one much more better than the new ones.
Yeah. And Shreyan, where's the demand right now? Where is the money flowing?
Oh, I think service-based businesses are doing pretty well. I would say, trade-based businesses, disability services, accounting, rent rolls, conveyancing, event hire space businesses. Because what we see is that this sort of businesses cannot be taken over by AI, right? So
Yeah, fair point.
when the purchasers are looking at these businesses, as soon as it hits the market, in 7 to 14 days time, we have got an offer.
Yeah.
Yeah. So compared to those brick and mortar businesses, but they are also pretty good, especially in regional Victoria, where the sales are pretty stagnant and high as well because of less competition and less overheads.
Yeah. Makes sense. Yeah. And Pooja, let's talk money. How are people actually funding these deals?
Good question. So, funding, of course, majority I am saying they are funded by the major banks and then the second tier lenders in the market. So, I would say that 70% of the funding is sourced through the lenders itself. And then the 30%, it comes in various forms. So, it could come from your equity, it could come from your cash savings. When I say equity, I don't mean that getting the equity out directly from your property. It just means that we are securing your business loan against your property.
Okay. Yeah.
So, which actually helps to get the better rate in the market as
Yeah.
well.
So it's like putting a security mortgage
Yes.
against that. Yeah.
Yes.
Okay.
Yes.
Yeah. Awesome. And what sort of rates do you get currently for the business loans?
Okay. Very, very hard to answer directly this one, but you could say the secured one, the secured business loans could actually start from 7.5%.
Okay. Interesting. Yep. And Shreyan, how do you know if the business is actually doing good? Like, what are some of the red flags versus the green flags?
All right. So when you're buying a business, the red flags would be, declining sales. the short lease or higher rent. Most importantly, high dependency on the owner. If those sort of businesses you're looking at it, those are red flags in the business, I would say. All right. When people buy business, they are into emotionally attached towards the idea and not the numbers. So if they don't do their due diligence better, they will be not better off doing the business well. And that's where majority of the businesses fail
Okay.
because you are emotionally attached to the ideas
Yep.
and not the numbers. And when I talk about the numbers, you should always look at adjusted profit to the working owner rather than just the profit as the business.
Yeah, it's like the net number that you're looking
Yeah,
at, basically, not the
exactly.
gross number. Yeah.
Because it's your time involved in running the business as well. So
Yeah.
that is the add back that you will do when you are running the business and how much money can that business give it to you. If you're working full time and the business can only pay you 25 grand a year,
Yeah.
it's not a good business to buy.
Yeah. No, makes sense. Yeah. And Pooja, like talking about the numbers, what are the common mistakes, or what are the, common pitfalls that people generally miss when they're looking at to buy businesses?
I think the main one, which I see when buyer is looking into the business in the market, the main one they miss is that how is the management currently into the business? So everyone start to look at the profit and loss in the balance sheet, which is good. Of course, we have to look at the numbers, but we really want to see that who is running the business.
Yeah.
So they miss that part, that who has been actually the reason behind driving all these sales.
Yes.
How is the culture? How is the work culture over there? So when the new person takes over, a very big challenge comes that they are not able to manage the team efficiently. They are not able to get them to drive the results the same way the old manager was doing. And that is why one of the questions we always ask when someone is buying into the business, that why this business?
Yeah.
Why not something else?
Yeah.
So I think that's a very, very big thing to look at, that how is the culture and the management.
Yeah.
One more important factor when someone is buying the business is that you want to see the trends.
Yes.
So trends, of course, are very important. If the sales has been increasing, if they have been consistent, or if they have been into the declining trend. So when we are looking at the numbers, we are not always trying to see that what net profit margin is. We look at how the cash is actually generated, where it has been reinvested.
Yep.
So a manufacturing business could have, negative profit margin, but a lot of the money was reinvested into working capital, buying new stock. So they are investing for the future. So there are many factors. We have funded the businesses where they were into the loss, but we were able to see the cost out because the wages were paid, the funds were reinvested, the projections were looking stronger. So that is another thing. We have to look at how the trend is, how the numbers are flowing through.
Yep. Shreyan, you mentioned the demand for like service-based businesses. Let's talk about the impact of AI into the existing businesses and also the demand for the new businesses. Like, what do you see in terms of the trends that's emerging right now with the lot of people, especially in PAYG, we talk to a lot of clients who are scared about not having certainty whether their jobs will still exist, 2 years, 3 years from now.
Absolutely. I think that's a good question. And with AI emerging right now, a lot of small business owners are using AI as a part of their daily roles.
Yep.
Like you will see marketing, you will see customer service, and you will see inventory management as well.
Yep.
When you talk about the AI, a business is run by a good operator. Right? Doesn't matter a person who is buying a business, if he's not good at the operation of the business, he can ruin the good business as well. So AI can, if you're using AI in your business, then I would say that AI can make good operator more stronger, but AI cannot replace a good operator of the business. So AI plays a most important role depending on what business you are in. Like service-based businesses, I was speaking to one of the recent business seller yesterday, and he has had set up his Apple Mini Mac in his office. Wakes up, and tells him, do this marketing, do this customer review. Can you give me the plan on how to market for next 7 days? And AI is bang on onto it. Now, this has taken all of his time and cost and energy of hiring somebody else doing the marketing in the business,
Yep.
because AI is looking at the trend all
Yep.
7 days, all 24 hours on how the customer acquisition is
Yep.
on your product, on your data.
Wow, that's impressive. Yeah, yeah, amazing. Pooja, do you have any sort of trends or any examples that you're seeing in terms of impact for AI? Do you have like clients coming to you with that fear, or that they want to get into the businesses because they don't have job certainty and things like that?
Oh, yeah, it has actually a big impact. So I definitely have seen the trend of that um, buyers, I would say, in this case, that they have started to analyze the market in advance. They are looking at if their jobs are secure or not, and then started to plan that if they could start a business on the side, or if there are two people in the family, husband and wife, maybe wife can start something onto the side while husband keeps working onto the job.
Yeah,
It is easy. It's that way. It's the risk is mitigated,
Yeah.
and they are managing it smartly. So they definitely are considering in advance and thinking about that if the job loss is happening,
Yeah.
how they can take it forward. One of the very good example of AI and technology I can give is that last year I had a customer approaching me and he said that I've got 15 staff members working every day in the office. And now what I want to do is I want to use the technology and AI somehow and reduce the labor cost.
Okay.
And then we strategized and we worked through it, and we came up with a very good plan that if we bring into the automated machinery into the business, then automated machinery can take a chunk of the labor cost.
Okay.
And within 3 months, we were able to finance those machinery, of
Okay.
course. The repayments for the machinery was only $5,000 per month, while he was paying $25,000 per
In
month.
salary. Yeah. Okay. Yeah.
So the cost dramatically reduced. So he was able to save and inject the money back into the cash flow.
Yeah.
So here the tech automation and AI has reduced the cost significantly.
Yeah.
But we had to work towards it because the customer was actually not ready
Yeah.
with that kind of money. So bank came into the picture. They helped him out.
Yeah.
They got the funding. So a
Yeah.
big role.
Yeah, amazing. Thank you. All right, Shreyan, let's compare business to property investment. What are the real differences in terms of investing into properties or investing into a business?
All right, good question. I think with the property, we have got buyer bird who can help you invest more into property. But again, property is, I would say, it's a stable growth,
Yeah.
slow and stable growth. But business can give you high returns
Yeah.
and quick cash flow depending on a business you buy. But the most important thing is business needs involvement. So if you are involved and ready to involve in the business, it's a good source of income for you. And in a way, with that income, you can build property portfolio. So I would say, property is a passive growth.
Yes.
Business will be active income.
Yeah, absolutely.
So if you are in a PAYG, like you're working for somebody else, you have got limited investment opportunity
Yep.
depending on your income that you get. But if you are getting a business with a better cash flow, then you can buy as many properties as you like and have that growth multiplied on a compound where your investment can increase to a lot.
Yeah, perfect. That's exactly how I look at it as well. Like, one is like, your cash flow. The other one is more like, for your future, wealth creation. So yeah, property is more for that future wealth creation, bit more passive. But yeah, in order to sort of hold on to these properties, you do need cash flow, whether you do that through the property investment or you do it through a business. But you do need that cash flow is like your fuel, and your capital growth is like your vehicle, like your engine to get you.
Absolutely.
Yeah.
So having a business has got a lot of benefits as well. Like you can have your expenses offset in the business
Yeah.
and save a lot and buy other properties.
Yes. Yeah,
Right?
absolutely. Yeah.
If you don't have a business, it's very hard to offset those expenses.
Yeah.
Like this is not an advice to do
Yeah,
it,
of
but
course. Yeah.
usually many of those expenses can be offset depending on your structure of work. Like if you're working from home, you will have those home expenses offset in the income.
Correct.
And that saves you a lot of income. You can buy other properties for it.
Yeah, makes sense. Now, Pooja, are there like sort of passive business investments out there as well, which doesn't require? You mentioned like husband and wife, and one person decides to take on risk, the other person continues. But are you seeing sort of businesses out there which are still possible to be passive? Because I talked to Shreyan quite a lot, and he's like, no, that doesn't exist. You still need to be involved in some way, shape, or form. Are you seeing any businesses out there, any opportunities?
100% fully managed business. You can say like there may be, definitely there are businesses out there which can be fully managed, but can we say that the person who is operating the business, who is owner of the business, can be out of the picture? No, they cannot be. So you can make it automated, you can leave it to the staff, the manager could be there, but at the end, managing the books,
Yes.
the cycle, the operational cycle, what needs to change there, if you need to change anything, all these decisions comes from the owner itself. So the person has to be involved in some way or form. You can't be fully out of it. Like it can't be like property that you can be fully out, and you still get the returns. So you still have to be invested in some way or form.
No, that's a perfect example, because with property you can hire property managers and generally can outsource the management aspect of it, and then you just spend a few hours just doing the accounting part. But with businesses you got to have a bit closer eye in terms of whether your business is declining, inclining, what are the challenges, operational challenges.
Some involvement actually has to be there, honestly. So for example, if someone is running a motel, so people see, okay, I would buy a motel and then I will leave it up to the manager, which is good, of course. A lot of the people do. They'll buy the motel and leave it to the manager. But at the end, if any work needs to be done onto the motel, if you need to purchase something, so all the decisions can't be left to the manager. You still get involved in certain way of form. The website is not working. The bookings are not flowing through. So you still get involved. You could say that you could minimize that involvement. So what business buyers would do, that if you are an active business buyer, you would be like, okay, I bought this business last year. It is 80% managed, 20% I'm involved. Let's buy another one. I think I have got the capacity to devote 20% towards this one. So you could do that, but 100% out, no.
Yeah, perfect. Yeah, all right, makes sense. And Shreyan, next segment, this is going to be fun for both of you. We call it the myth busters. So I'll throw a statement and, you have to bust the myth. So the first one for you, Shreyansh. You need millions to buy a business.
Not really.
Yeah.
A business can worth from 150 grand up till 500 grand or $1 million or up to $5 million as well. Depending on what business you're buying. But to buy a business, if you structure the deal properly, you don't need millions. Like I have seen people buying a business with $0 as well. And I have seen people buying a business with 80% finance as well. Because there are, nowadays, what I see is the creative deals are happening in the market. The seller is helping the buyer with the part of the sale. Sale price, all right? Which means that the seller also wants the buyer to succeed, because a lot of my sellers are baby boomers. So they are retirement. Now, for the retirement, they can't have the family owning the business. And at that time, you see that, all right, there is $1 million asset into it. There is more than $1 million of revenue into it. Like I would say more than 10 million of revenue. But again, to structure the deal, if you got a seller side with you, then you don't need millions to buy the business.
Okay, interesting.
It's about structuring the deal smartly.
Okay. And what was the cheapest sort of business deal that you've done in the last 12 months? Have you got an example?
In the last 12 months, the cheapest I did was 780 grand.
Okay, what was that? What type
it
of
was
business?
A laundry shop.
Okay, interesting.
And laundry businesses are doing very well. They're in high demand, especially laundromat.
Okay, interesting. Thank you. All right, Pooja, businesses are too risky.
Myth. Not risky. Of course, risk comes in various forms. It is all about you getting into the right business, where you feel belong, where you can add the value. So if someone coming from a food industry experience altogether, never been into the IT, and then they take the IT business, if it is definitely risky. So you have to strategize and get into the right business at the right time.
Yeah.
That's where you manage the risk, I would say.
Okay.
But not risky.
Yeah.
That's a wrong word.
Just exploring what you said, do you actually need experience in the industry that you're going to take over the business? No? Yeah.
Like that's a myth again as
Yeah,
well, right?
yeah.
I have bought and sold more than 6 businesses
Yeah.
for myself throughout my life career, right? Now, I studied IT, as you know,
Yep.
right? But we were into hospitality business.
Yes.
From there, we were into development business.
Yeah.
And now we are assisting people to buy and sell business. So
Yeah.
when you buy and that is the beauty of buying a business, because buying a business comes with sales, strategy, brand, and systems in place.
Yeah.
And the owner is willing to have a smooth transition training with you,
Yes.
which means that you stay in the business. And as I said earlier, if you are involved in the business, you will learn the business well and
Yeah.
you can do well.
Yeah.
So it doesn't need experience, but yes, if you got experience better in what you are doing,
Yeah.
then you can buy a bigger business where the banks can lend you more money
Yeah.
depending on your experience, which
Yeah.
can take your income 3x.
Okay. Yeah. Yeah. Perfect. And talking about bank lending, is that a myth that bank don't like to fund businesses?
Oh, no, surely it is a myth. Bank loves to fund the businesses. They love to fund the right business. That is what I would say.
Yeah.
Because if you see, if bank is going to fund a business for 80%, I would say actually even 100%. So I have funded 100% of the funding for the business. So if they are putting their 80 to 100% of the risk, which means they want that business to succeed. They don't want it to fail. So they want to make sure that the business customer is buying is actually worth it.
Okay.
The person who is buying is actually has got the capacity and capabilities to operate it.
Yeah.
So bank love to fund it, but it for the right person in the right business.
Makes sense. Yeah. All right. So the next segment is going to be real case study examples. So you can both can pick either a success story or a horror story. But we want to hear sort of client examples in terms of somebody who you might have helped buy businesses and how that turned out to be, whether it was life changing for them or like a horror story for them. Maybe I'll start with you, Shreyan. Yeah.
All right. I think, see, again, when you buy a business, especially if you do your due diligence well, if it can be a life-changing business for you guys. All right. A recent example of, I worked with a buyer to buy a regional business doing annual revenue of $2.5 million. He structured the deal as a part of vendor finance, but had that cash flow with him from day one. So with that cash flow, he improved the marketing, the customer service that the business needed, and added the product range.
Okay.
Now doing this, in first few months, he saw the growth significantly.
Okay.
So buying a good business, having a right operator, and structuring it well, it's a life-changing for them. But again, if you are not sure and you are emotionally attached to the business, not looking at the numbers, you are emotionally attached to the trendy ideas of the business, it can take your life 5 to 7 years back.
Yeah. Very good example. Yeah. Pooja, have you got one?
Yes. So I will not tell the horror story because we don't want to scare from the business buying and the market. I'll share a very good story. So 6 months, actually 9 months ago, a customer approached me.
Yep.
And he said that he wants to buy a business and he do not have any deposit.
Yep.
And I was like, okay, if you do not have any deposit, like why do you want to buy it now? Do you want to rather wait and save some money and then do it? It's like there is a good opportunity in the market. It was in the food industry without naming the brand.
Yep.
And it is a really good one close to his house. He really likes it and he sees the possibilities into it.
Yeah.
So we sat down, we strategized, we made the full, actually 5-year plan.
Okay.
So we made the plan. I understood that how the business is looking at all the aspects of it. And then by leveraging the equity into the customer's property,
Yep.
we were able to fund it 100%.
Yep.
And the good thing was that because the customer had the total faith that he can grow it.
Yep.
He was determined, okay, I'll make it happen. And actually he did. So now 9 months later,
Yep.
we are talking again, and he wants to buy the same franchisee times two.
Okay.
So
Yeah.
he's buying two more franchisees 9 months later. He proved himself.
Yes.
He did very well.
Yeah.
He also built up some cash flow. Of course, not that much that he can still inject a lot of cash.
Yeah.
But up to the position that he's confident that he can take the next two forward.
Yeah, lovely. I think that's really good story. And I've got a friend of mine who's got a very similar story as well. They started with one franchise and now I think they're up to three. I think it's like when you build your confidence into the same brand and you know how the businesses work,
Yeah.
then you're just basically occupying different locations, really.
Yeah, of course, of course.
So
Awesome. Yeah.
Sorry. So
Yeah.
I would like to add up over here.
Yeah.
Like right now, the buyers out there will say, "Oh, we don't like franchises.
Okay.
We don't want to be a part of the franchisee business because it's like buying a job for your own self." But always, I would say, if you're buying one franchisee and you are just buying one, you are staying it there, working over there, it's like a job for buying your own self. But
Yes.
as Pooja said,
Yeah.
if you're buying 2, 3 other franchisees,
Yeah, then
4
it's-
franchisees, 7, 8, 10,
Yeah.
you're minting money.
Yes.
That's where the money is made.
Yes.
So franchises gives you a good growth. Like I
Yeah.
I started with a franchisee as well.
Yeah.
It gives you a good growth, good expertise in terms of the all the systems that they have
Yeah.
in the place.
Yeah.
You get experience.
Yes.
But if you're just stuck at one,
Yeah.
you're not doing better.
Yeah, no, that's such a great point. Like because the franchising, obviously, there's a brand is there, foundation is there, platform is there, systems are there, and then it's just up to you, like what areas you want to tweak a little, and then really have the exponential growth come out of it. So no, perfect. All right, we're gonna close this episode. So if property is your foundation, businesses could be your accelerator. So I'd really thank you, Shreyansh, and thank you, Pooja, for joining us for this episode. And if you're thinking about building wealth beyond property, this might be your next move. And if you like the content or if you've got more ideas, feel free to like, subscribe, and also comment in terms of what other topics you want us to cover.